Morning. Can you hear me? So let's just give others just some few minutes, 5 to 10 minutes before we proceed. We'll just give them 5 to 10 minutes before we continue. So as you are waiting for others to join, I just wanted to share with you something that can actually help you in your trading. It's concerning the issue of how the market moves and also how you react to how the market moves. So over time, I've actually realized that most of the people that are in the industry, they don't even understand the industry that they are in. I'm saying this in the sense that, for example, do you know that the market, the way it's coded or the way it's programmed to an extent that, for example, they program it to an extent that they know that if the market is coming from this level, the next level that it has to go to is this level, right? So if they program it that way, this thing won't move straight like this. As it won't move straight like that, what they are going to do to confuse people who are not aware of that, it will move up until the day that it reaches the target there at the top. So this is a similar nature of what is happening on the market every day. When you're coming from one major zone, let's say one major zone of supply or one major zone of demand or one major zone of resistance, the next major zone, that's the target that they'll be targeting to push price to. So if ever you're not aware that in between the whole progression, there are going to be fluctuations that will be happening. Fluctuations that will be happening in between as it will be going all the way to that zone that you'll be targeting. So many people, they are confused during the fluctuation moments. When the fluctuations are happening, that's where many people, they lose money. Number one, that's where many people, they get confused with what is really happening. There are moments in the market where you don't need to even place a trade. Do you know that? There are moments in the market where you don't even need to place a trade. Are you aware of that? There are actually moments in the market where you don't need to place a trade. For example, I just gave a simple example right now that let's say we're coming from this major zone and you are going towards that major zone. The market makers, they are aware that we're obviously going, at the end, we're going to reach that zone, right? But before they reach that zone that they will be targeting to reach, they make sure that in between, so this is the range that they would have placed. This is the range, right? This is what we call the range. This will be the range that they'll be looking at. So after they've discovered their range like that, They make sure that retail traders, they are confused in between before they reach their target. How do they do that? They do that by placing what they call fluctuation moments. Fluctuation moments, these are moments where, for example, let's say the market goes up here, plays around, comes back down, goes up, comes back down. So this is just a typical example of some of the fluctuation moments that you will find on the market. This is a fluctuation moment. This is a fluctuation moment. This is a fluctuation moment. That's that whole zone here, this one. This as well, it's a fluctuation moment. So you discover that from the time the market came from down here, came from the bottom here, that bottom, one could have gotten an entry there. Then here during the fluctuations, you don't need to place a trade during the fluctuations. Actually wait for the breakout. That's why I always tell you, if ever the market is consolidating or it's trying to form a certain structure, wait for the break of that structure. For example, here the market was building structure in that fluctuation zone. So upon the break there, that was the next entry point, the reasonable entry point. Here back to this zone, that's another entry point, right? So this drop as well, you realize that the drop that would have happened, it would have happened also in sort of like a downtrending channel, which was also another structure build up where you could have also entered upon the break here. That's the next best high probability trade that you could have entered. As it goes up, it actually started to create and fluctuate here. Where was your next trade? There, up until we reach the major target, which is this zone here. So after you have discovered your range, you always need to discover it on a higher time frame. On a higher time frame, once you discover your range, that you are trading from this range, from this bottom to this high, or from this high to this low. Once you have discovered your range, know at the back of your mind that in between that range that you have placed, there are going to be fluctuations. There are going to be moments where the market will give you pullbacks. There are moments where the market will establish some chart patterns. You always need to be aware of that. So how can one trade in such a market like this where there are fluctuations in between the range that will be trading? Right. For example, here, once you have discovered that this is the level that the market is coming from, right? For example, this first trade you would have entered. But then as the market will be moving, so here, if you enter, obviously, when you enter there, your stop loss is just below. When you enter here, obviously, when you enter here, let's say you enter here, your stop loss is below the zone, right? So after you enter there, you look to the left, you identify either any other mini level of resistance that might be in between the major range that you're looking at. This is the major range from here to here. But in between here, you might find maybe there might be some small mini levels of resistance or small mini levels of supply or demand. So those ones are the ones that trigger these fluctuations. So the market can actually come and tap into that zone, then drop because of that mini resistance or that mini supply that will be there. So what you do when the market is moving, make sure that how do you shift your stop loss? You shift your stop loss based on these mini levels. As the market reaches the first mini level, you can shift your stop loss either to break even or all the way to maximize profits. So as it will be moving, you'll be shifting your stop loss higher and higher so that even if it comes back all the way down like this, you would have still made profit. Then you enter another trade, right? You enter stop loss below. As you enter stop loss below, you wait, you do the same, you look to the left. Once you identify a level of resistance or a level of supply to the left, once you have identified it, you lock profits, you shift your stop loss higher and higher and higher and higher. Then if ever it gives you a retracement, you know that you would have closed maximum profits. You know that you would have closed already maximum profits. So even if it comes back all the way here, you're not taken out. Let's say you're still in the trade, you're not taken out, or your stop loss is either on break even or it's a very tighter one. So if it goes all the way up until it reaches the top, so what you'll be doing, you'll be shifting your stop loss higher and higher. Once the levels of resistance have been broken like that, you shift your stop loss lower. So Doing that, it will help you, for example, when the market starts to fluctuate, it will help you also to scale in trades after the market finishes a fluctuation zone. If ever you are trading and you are not aware of where the fluctuation zone is, if you are trading and you're not aware of where the fluctuation zone is, very soon you are going to lose money. Those are the kinds of people who make money today, lose money tomorrow, make money today, lose money tomorrow. The reason being, you are not aware of fluctuation zones that are there on the market. So the benefit of identifying the range, number one, and also shifting your stop loss, number two, is so that during fluctuation zones, you're not shaken. And also after the break of the fluctuation zone, you are able to scale in more trades. Are you understanding what I'm saying? Are we on the same page? Are we on the same page? Is it clear? Anyone with a question before we move on to the charts? Anyone with a question before we move on to the charts? Anyone with a question? If it's clear, just say clear. If it's clear, just say clear. Then we proceed to the chart. Proceed to the chart.
Clear. Clear.
Wonderful. So let's look at the chart. Yesterday, remember. So what we are going to be doing in these sessions, for example, when we start on the chart, we always make sure that we do a recap of what we talked about yesterday. So yesterday we analyzed particularly 3 instruments: Pick 75, Crash 500, and 300. Those are the instruments that we looked at yesterday. So we'll just do a recap of that. We'll just do a quick recap of that. A quick recap of that. We'll just do a quick recap of that before we move on to maybe a different instruments for the day. Right. Remember yesterday in 300 what we said, we actually started from the daily. We actually started our analysis from the daily, right? I actually showed you guys, this was the analysis of yesterday. I showed you. So after this break of this counter trend that happened, after the break of this counter buy that happened, one could have sold there, held their trade all the way to this low, right? Which target was reached after 3 days of holding. So this was actually a sell that one could have taken and held it for 3 good days of holding. So after that now, I actually say after such a push like that to the downside, we always expect a form of pullback, either somewhere around 50%, 61.8 or 78.6% Fibonacci before the market continues all the way, right? Say that. So we actually went down to a lower time frame. We went down to 4 hours. We went down to a lower time frame. We went down to 4 hours. This is 2 hours. Okay, let me just go straight to 1 hour. Right, let me go straight to 1 hour. So going down to lower time frames, we're simply going down to identify some opportunities that one could have taken for the current moment. So going down on the 1 hour, I actually marked some levels. I marked this level here as a lower high because the market was downtrending. This was the lower low, lower high, lower low, right? So lower low, lower high, lower low. So from this lower low, I said, if ever this market is going to shift momentum to the bullish side of things, it has to push and come and break this lower high, right? After it breaks, it gives us a retracement, then we continue going up, right? Then if it doesn't do that, if it fails to break here, it will just be a double top, then it continues selling. Those are 2 possible scenarios that I actually said I'm looking forward to yesterday. So having said that, I also marked a level, which was this level, this was a level of resistance, right? And I said, once the market breaks above and gives you a rejection, once the market breaks above there and gives you a rejection, you can actually start buying your stop loss below the level, right? So you realize that after the market broke above, it gave this first rejection, came and gave this bullish engulfing, right? So after this bullish engulfing, you realize that if you zoom in closely, you realize that there was a mini resistance that the market was failing to break. This was the mini resistance, which was what would have guided you not to enter any trade there. Why? Because the market was failing. Came the first time, established the resistance. Came the second time, expected the resistance. So here, touch. The market was failing to break above. Had it broken above that level, you would have actually bought straight here above there. You would have actually entered your buy, your stop loss just below this zone like this. You would have entered your buy there. But the market failed to do that, right? So after failing to do that, the market actually came and gave us a third touch now. First touch here, second touch here, third trend line touch. Third trend line touch, that's where our entries were very beautiful there. So our entries were very safe there on that third trend line touch. First touch, second touch, third touch, that was a very good entry. So either that trend line touch was going to be an entry or this demand zone. If it came to this demand zone, we're also going to buy there. Our stop loss below this zone, but it didn't come all the way there, which was still fine. So the trend line touch, you enter, you buy, you stop loss just below the trend line like that. So right now, it came back to that other resistance that it established that time. Came back again to that resistance. So this resistance, you could have used it to scale in more buys, right? How? For example, the first buy is there, right? Then the market came, broke above. You see here, it broke above. So after breaking above there, you could have even scaled in more buys. How? Just by entering there, above there. Your stop loss now is no longer down there, but it's actually just below this support zone. Your stop loss just below this support zone, or immediately just below this red line here, just the red resistance. So you could have also scaled in more trades there. Your target is still the same. You are targeting that lower high, because that lower high, if it's not broken, the market will continue in its up and down trending nature. But if it's broken, we know that the bullish momentum is now kicked in, and the market pushing higher and higher. So right now, boom, 300, it's currently buying. And if ever you actually listened to what we said yesterday, you're actually holding the buys right now. Right now, you're actually holding. So right now, this person, if ever your entry is here, your stop loss right now, you can even put it to break even. This one, that one, you can put it to break even. This one, you can simply leave it there where it is. So those are the two best entry points right now. So the reason why I actually explained what I explained at the beginning is for the people, for example, someone who missed, let's say someone who missed this trade. You don't just jump in the buy anyway. Let's say someone just buys now. If you buy now, where is your stop loss going to be? That's not how we do things. So the reason why I explained that there are zones where you must buy, there are zones where you mustn't even place a trade. You simply need to wait for the build up of structure. For example, here you can see that first touch here. I have a second touch there. So that is actually structure build up. This is actually structure build up that can actually help someone who made based on the trade to join in the trade. For example, this here, I have my first touch here. I have my structure, something like this. Can you see this structure? This is an upward structure. So this structure here can actually guide someone who is not in the trade to enter the trade. How? You wait for the break of the structure. Break here, if it breaks above here, retests here, you can actually join the buys upon the retest of this. Touch, break above, retest, you join the buys up until we reach our target where we are expecting. So that is all for 300. If you have any questions, feel free to ask before we move on. Any questions? Is it clear? 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 If it's clear, just say clear, then we proceed. If it's clear, just say clear, then we proceed. Clear. Okay, so that was it for 300. It's still a trade that is running. We also looked at VIX 75. We also looked at VIX 75, and as far as I remember, right. So VIX75, let me just go to 4-hour time frame. We are flowing in a downward channel, right? We have a downward channel that is there that we managed to plot. So I said, for example, this trend line here, after it was broken, one could have entered their sales there. I said it yesterday. You entered your sales there, targeting either this zone or this zone of the GP, which has been reached after 3 or 4 days of holding. So this trade is no longer running. So right now, what we are now waiting for, we're now waiting because the market has tapped into a very significant zone. It's a very significant zone of demand that I placed here. One can put it in order block, one can put it in demand zone, whatever they want to call it. You are still correct. So where can one enter this trade? Where can one enter this trade? The safest area to enter this trade is after the break of this counter of this downward channel. Where is the break? Somewhere here. Break and retest here. Somewhere around this zone. That's the best to buy that you can place. I'm targeting basically the market to come all the way to the top. That's where I'm targeting. So right now, what we are simply waiting for the market to reject here. Once it comes and breaks and retests here, we're going to take our buys exactly here on that zone. Then we hold all the way, we hold all the way to the top. We hold those buys all the way to the top where I marked there. So VIX75, nothing much to explain there. We're simply waiting forward for buys. We're simply waiting forward for buys. Anyone with a question on VIX75 before we proceed to Crash 500? If you have any question, feel free to ask before we move on. So Crash 500, yesterday we predicted buys, and the buys are actually currently running. So yesterday on Crash 500, this was the analysis. It was the analysis. I actually did this analysis with you guys here on Zoom. So according to yesterday's analysis, I say we have this downward channel, right? We have this downward channel, and this downward channel is flowing. There was also this counter trend, the upside. This one was going to guide someone to enter sales upon the break here. Upon the break, this counter trend when they entered their sales, holding all the way to this zone, which was hit. So right now, I'm expecting buys all the way to either this trend line or that green zone that I marked. So those buys, I actually predicted them based on. So we had also a similar nature to 300. We had a level of resistance, which was here. This was a very clear trade. This was a very, very clear trade. Maybe I didn't get this one, I don't know, but this was a very clear trade. One could have entered it in so many ways. One could have entered this trade in so many diverse ways. Right. So if you look at it, right, where this trend line, I drew this trend line yesterday, and I said upon the break, you can actually enter the buys. So upon the break, one could have entered their buy immediately, or waited for the break of this resistance. This resistance after it was broken, you can enter immediately upon the break, your stop loss below, or wait for this retest, which also tapped this fair value gap or imbalance zone. You can also enter. So first entry upon the break of this trend line, you can have entered. Upon the break of this resistance, you can have also bought. Upon the retest of that resistance, which was now in support, you can actually also buy. So 1, 2, 3 entry points so far that we actually have been having. So right now we're still holding those buys. It's a trade that is still being held. We are still maintaining the same buyers. Nothing has changed. We are still having the same bullish buyers. So right now we also have this resistance that is just above. So for someone who is not in the trade, you can wait for the break of that resistance. You can target this trend line or all the way that I marked like that. So if it is the trend line, you can actually shift your stop loss to break even. You can actually look your profits. Then if it gets all the way to the target, it's also fine. You would have made all that money. Anyone with a question? Anyone with a question with Crash 500? Any question before we look at other instruments? Any question? Is it clear? Is it clear? Is it clear? Is it clear? So, which other instrument do you guys want us to look at? Which other instrument do you want us to look at? Which other instrument do you guys want us to look at? Which other instrument do you want us to look at? Just type there or just say it through your mics. Which other instrument before we close? Which other instrument do you want us to consider? Index. Okay. Step index. It's been a long time since I checked the step index, but it's fine. It's not a problem. Look at it. So those who know me, they actually know that I personally focus on big 75 now. Unless if my big 75 is it's consolidating or it's ranging, that's where maybe I look at other instruments to trade the opportunities that they might give me. But basically, I'm a guy who focuses more on big 75. So this step index is very clear. This one is a very, very clear one. Very, very clear one. Whenever you are part of our mentorship, you know that these things are very easy. People they just complicate easy things. After we have marked our major levels, right? So step index, looking at it from the daily. This is the daily, right? You realize that we have been in a major downward channel for a long time. Major downward channel, and once you know, you guys, you know that once we break outside of major downward channel like this, we are now in a new channel. So the new channel here is the bullish side of things. So this is what I'm now expecting to happen with step index. I don't know. I'm not sure if it's going to come all the way to the top where it's done it. If it's possible, it's also possible. It's also possible that such a scenario is what is called balance on the market, whereby a market that was downtrending for a long time starts to uptrend all the way back to where it started to fall. That's balance of the market. So that is also a possible thing. So not to waste much time on that, just zooming. So the flow right now, the momentum, we broke out of the major downward channel. So we're now looking forward for a new channel. We're now looking forward for a new channel. We draw our new channel. Let's draw our new channel. This is our new channel. This is our new channel. Right. Something like this. This is our new channel. So this is our new channel. I hope everyone can see it. So if ever you are part of the mentorship guide, these things are very easy. Check this out. Now I want you to look at this. Remember what I said in the beginning of the video, that there are ranges of market. For example, once you're in this channel, once you're in a channel like this, right? Okay. Where was the fluctuation zone? One can actually identify a fluctuation zone. Okay, let me just remove this now. Counter trend line to the last line. Okay. So if you look at the market close, this was a fluctuation zone. Fluctuation zone, one could have been guided by this fluctuation zone to enter this buy. So this buy, a smart trader would have looked at this. First touch here, second touch is this, third touch here. On that third touch, one could have entered their buy. On this third touch here, one could have entered their buy. Where is your target? Your target, you always look to the left. Same thing that we always preach. You look to the left. If you look to the left, where is your target? If you look to the left, this was the previous high, right? That's the first target. Another high. Then another high. All the three major targets were reached. Can you see that? So even if you entered your buy here, your first target here, which was your previous high, it was reached after 1, 2, 3, after 3 days of holding, reached. Same as here, you could have, so upon this one, once it was reached, you would have shifted your stop loss to break even or lock to maximum profits. It continued going. You would have continued shifting stop loss higher, looking profits, continued going up until it reached this target. After it reaches there, obviously, you would have locked maximum profits, or after you see this this build up of this failure to continue higher, actually can look that trade. So that was the first major trade there. Here, from there to the top here. That was the first major trade, right? So after that first major trade, what happened now? The market came back. If you check, it came back to test this, guys. It came back to test this level here. This is a support. This was a resistance, but it's now a support, right? Break, retest. It retested the support, retested the first time, second time, third time. So it's also the same thing. First touch, second touch, third touch. You would have entered on third touch, or even here upon this retest, you would have also entered the buy. You would have entered the buy there, or you could have used a counter trend line like that. Using this counter trend line, you realize that was broken, then retested. One could have entered immediately here on the retest. You have joined in the buy. Where is your target? We are still doing the same thing when it comes to targets. You look to the left. As you look to the left, you realize that there was this resistance. Remember, this is still a resistance that is relevant. So this resistance reached, target was reached. Target was reached. So after the target was reached, look at this now. Look at this. This is so interesting. We have this counter channel. This counter channel could have guided you for sales. These sales now, you now have a backup. Now, where can you target all the way? You can target them all the way to the bottom of the channel, which is this one. So when you now have a channel like this is the range that the market is moving in. Top of the range and the bottom of the range. So here upon the break of this counter trend line, one could have entered their sales. Target, you're targeting the bottom of the range. Target was reached. So these three major trades that you can see, these are the three high probability trades that one was supposed to enter on step index. So far as I can see, those are the three major trades that one could have taken. I didn't look all the way here, unless if you want to look all the way from here, it's also fine. Because upon the break here, I can retest there, you can have entered your buys here as well. Here, you have entered your buys here. Entered your buys there. The target you go is to the left. First target was here, reached. Second target was here. We have a zone here. It's a zone. Just reached. So first and second target were actually reached like that. So if it's not even, you would have made a good amount of money there. So fluctuations. I hope you can all see the fluctuations. The fluctuations ones. This fluctuation. This fluctuation is just there to deceive or to confuse retail traders. This whole fluctuation. This here. Fluctuation. So right now, if we zoom into step index, remember we're in an upward channel, right? You can actually start to plot some structures. right? This is another channel that you can actually see everyone, and you can also see this channel. So this channel can actually guide once someone wants to buy. This downward channel, it can actually guide you if you want to buy. Same as the resistance that is above it. This will guide you. So upon the break of this downward channel and the break of that resistance, one can enter their buy. Where is your target? Your target, you are looking forward to the previous highs, the previous levels of resistance. Simple thing, same thing every day, every time. Nothing is going to change. Same thing, same thing. It's the same thing over and over and over and over. So once we break here, so two scenarios, I'm expecting two scenarios. Break here, we test, then we first scenario. Then the second scenario, but that one the probability is less, is for the break of this downward channel. That is a less probable scenario. But if it happens, you always know what to do. You always enter upon the test of that here. But that's a less probability scenario because we are now in an upward channel. So in an upward channel, we always expect the price to continue pushing higher and higher and higher and higher and higher. So here you realize that this can be a first target, second major target can be the top of the range, which is that trend line. This trade, one can actually hold this trade a week, weeks, simply holding this buy. So right now, wait patiently for that break. Once the break has happened, wait for the test. You can enter your trade on 1 hour, 30 minutes, even 15 minutes, you can enter. So once that has happened, you can enter your trade in those smaller time frames. Then we see. I hope it's clear. I hope it's clear. I hope it is clear. I hope it is clear. I hope it's all clear. I hope it's all clear, guys. I think we'll meet again on the next Zoom session. Meet again on the next Zoom session.